Well, welcome everybody. I can't seem to get off the psychology when it comes to trading, and it doesn't really matter whether you're prop trading or trading your own money, or or pretty much any um, kind of thing that you want to do seriously. You need to have your psychology straight. You need to have your head straight, and really. We all know, and it's been shown in many studies, that 90% of traders struggle. They're in the I lose it all to struggle in that 90%. And it's also true that 90% of traders do very little, if anything, when it comes to the mental and emotional part of trading. And I've learned by dealing with traders for the last almost 4 decades, or past 4 decades, that if you can build a trading plan, if you can employ in your trading plan um, options, alternatives to fit the trader, rather than having a trader change who they are, if we can massage the trading plan to fit a trader, then that makes a whole lot of sense as far as asking a trader to be a disciplined trader. So I do both. We do both around here. But today I want to focus on the psychology of prop trading. For the last year, I've really focused my intention on prop trading and the beauty of it. I believe there's a revolution that's already coming that is inviting traders of all sizes, not only traders with small accounts that can trade much more money and still get the majority of profit, but those with larger accounts. They say to themselves, why should I be risking my own money when I can be trading somebody else's and still make the lion's share of the profit? So I want to go through some of the psychology of prop trading for those who are considering prop trading, and those who are in it right now and are can't seem to be they're not getting the results that they may have thought they could get by lessening the stress by trading somebody else's money. But the stress is still there. I mean, if you're a responsible person, you don't want to lose somebody else's money. You don't want to waste your own time. So there are things that you can do, and I'm going to show you some of those things for prop trading. That three major changes that I believe that you should employ, either through taking advantage of the offer that I'll make you at the end with the loaded gun trading plan, where we've adjusted that for you, or take a look at some of these, understand these three major changes and employ them in your own trading plan. I'm dedicating this presentation to Riley, who went over the Rainbow Bridge about 10 days ago. He was 16 years old, and anybody that owns a pet dog or cat, I have one more dog, and I have 3 cats. I'm a kind of an animal person. If you're that kind of person, you know the what you go through when you lose a family member. Riley and his friend Juliet just barked at every UPS driver. Hello to every UPS driver, and hello to every bicycle or truck that goes past. And so I'm dedicating this to Riley because he's still on my mind. Okay, what I'll be covering today is, who am I? Give you a brief synopsis of where I came from and why I'm here to help you. What I call the green line, the red line, and the green line when it comes to prop trading. I'm also going to talk about the three major changes that I mentioned that you may need to make in your trading plan in order to kind of turn around your success as a prop trader. And I'm going to give you an alternative, a trading plan with everything built in. And on behalf of Riley, I'm going to give you a special discount for that. All right, let's get going. I appreciate everybody being here. I want to do this together with you. Let's get going. I graduated the University of Cincinnati with a degree in mathematics. I actually started training as an engineer, but I had trouble with mathematics. Not mathematics, but I had trouble with mechanics, and took me a couple of times to get a C in that, and I was a straight A student in high school, but I think a lot of that was my photographic memory, of which tend to wane by the time I get into college. Anyway, I added up all my credits and decided, let's get out of here, and graduated with my math degree. I was in the restaurant business, working nights and weekends, etc., to earn money to go through college. And I was in Cincinnati, Ohio, and worked at one of the most popular restaurants called the Prime and Wine. It was a salad bar restaurant that, if you're from Cincinnati, you know this restaurant. And if you own one of these cars, you could probably retire. But this is a picture during the late 70s when I was there. I decided, hey, the money is really in alcohol, not in food. So I took a job with somebody, a group called the American Events Corporation. And the first club they sent me to was a club called Park Avenue. It was on 500 North Water Street, Milwaukee. It was supposed to be supposed to compete with Studio 54. We charged $1,000 a year membership. And, you know, in the late 70s, early 80s, that was a lot of money, still is. We had the dancers, we had the men and the women in great outfits. We had the lit up dance floor. We had it all there. And it was fun and it was successful for a period of time. I would hire everybody, train them, and then move on to the next, after a few months, move on to the next city, which was Knoxville, Tennessee, then Dallas, Texas, and others. But after a while, you know, you can't stay in this business for very long. Anybody who's been in the nightclub business is still keep your mental state going. So I decided to add up all of my experience in my head and say, what can I do with my life now that I've got the math degree? I've never really used it. I kind of like the idea of gold. My brother followed a guy named Harry Brown, who was a gold bug originally back in the 80s. I took a job with a firm. My first trading experience wound up to be a firm that was a fly-by-night firm. I didn't know any better. I got on the phone. I sold a couple of gold options, and I walked, after about a month and a half, I walked in one day, and this is what I saw: an empty office with a plant in the corner. I took that plant, put it in the back of my car. Actually, the landlord followed me to the car, and when he understood that they owed me money as well as him money, he said, yeah, go ahead and take the plant. I've got bigger problems. So that's what I got out of my first experience. But then I decided, let me find out who the best and the biggest firm is that was involved in options. And I wound up running, after 2 years with them, I was the regional sales manager and or the regional vice president, and then ran an office of 60, almost 65, 63 traders who were responsible for doing the best they could for their clients. And what I realized very quickly was that those traders who had simple trading plans, those that were not complicated with redundant indicators, were the ones that did the best job for their clients. I would take them into my office. I'd have a red pen, and I'd literally just start taking away half of the indicators, especially those that were redundant. I mean, why have a MACD when you've got an RSI, two momentum indicators? The more hurdles you put in your way, the less you are likely to be in the market and make any money. On the other hand, you have to have the prime indicators so that you can judge when the right time is to get into markets. So I've written several books on how to design and construct effective trading plan. I think that's still available. That was written over 10 years ago. And I've had books written about me, as I tend to be very dramatic when I'm on stage. They usually put me first when I did the trading expos, because I would get everybody a little bit more excited about the next speaker, as I talked about their mental and emotional states and how they can be a better trader. In any event, let's get to the presentation proper. Now that you know a little bit about me, The red line is something that when you prop trade, and I'm going to talk in this presentation about a $50,000 account, which is an amount that I think is the best to start with. It's one of the easiest to qualify for to get funded. You need to pass the qualification and then you get funded. You have to make $3,000 before you lose $2,500. So the red line is that $2,500 loss line. In other words, when you start out with a $50,000 account, you can't have a balance less than $47,500 where that red line is. And as you progress, as you build that 50,000, say to 51, that line, that $2,500 line follows you. So if you end one day the balance of 51,000, then it's 48.5 because you can't, you don't want to breach 2,500 below your closing high. In fact, in the firm that I like to use, Apex and Top Step, and Apex especially, they count open trade equity. In other words, if you don't take the profit you're given, they're going to count that against you. Now, that may sound horrible, but it really does make you a better trader. So the red line is that line where you don't want to breach, because if you blow out the account, then you've got to reset the account, and that's another cost. In this field of prop trading, the initial qualifying phase usually has a monthly cost to it, usually somewhere in the neighborhood of a couple of $100, but they always have discounts. Right now, Apex is running something where you can, it's only going to cost you less than $40 a month to achieve that 3,000 before you reach the red line. So staying out of trouble is easier than getting out of trouble. We used to say that I'd rather be out of a market wishing I was in than in a market wishing I was out. But that red line you've got to be aware of. And my point about mentioning the red line is that, again, that's the point at which you go below. In this particular case, in the $50,000, that's 47.5. Go below that, you've got to reset. Above that, you can continue to trade to make your $3,000 to hit that $53,000 mark. You need to stay fully aware of the red line, and I bring this up because I know that, from coaching and from my own experiences, I know that years ago, when I was struggling for money, I would hate to open up an envelope with a bill in it, because if I didn't look at it, it means it's something I didn't have to get stressed about. And if you were to make a couple of losing trades when you start out in prop trading, you tend to ignore that red line. Well, I know I'm close, but I'll keep trading. It's good to know exactly where you are in that red line, because awareness, keeps you on top of the game. Again, the idea of counting open trade equity when you trade. In other words, if you started at $50,000 and you put on a trade and it was up $1,000, but you didn't take it, and it came all the way down to break even again. Normally you would say, well, I'm even, that's okay. But in the system, they'll count that $1,000 against you, even though you have a balance still of 50,000. Now your red line is at 48.5. So it's a major drawback to count open trade equity, but I also think it's a major benefit. I think that traders who have been consistently successful have always looked at open trade equity as a profit they don't want to give back. And those traders who say, well, I'll put in a stop at break even. If I give it back, at least I didn't lose anything. That's the thinking of a losing trader, of a struggling trader. A a successful trader will honor or respect the fact that they've made some nice money in an open trade, and they'll start defending that. But it's not easy to do when you only have one position, or you treat the contracts. And I'm going to talk in the nature of the futures market now. When you have if you have multiple contracts but treat them as one, you tend to have that question of, should I grab the profit, or should I let it run? I also want to talk about the green line very close. First, the green line is when you get close to the $3,000 achievement. When you're at 52,700 and you only have $3,300 left to be funded, you can sometimes tighten up. You don't want to you don't want to lose. You don't want to retract it, but you don't want to be so aggressive that if you're wrong, you won't be close anymore to being funded. So there are a lot of mental and emotional occurrences when it comes to prop trading that you would believe were eliminated by the fact that you're trading somebody else's money. But look, if you're a responsible person, first of all, you don't want to lose somebody else's money, even though these are big firms that can certainly afford it. They're making fees and so on. You don't want to worry about them and their money. But on the other hand, you do want to trade in the right way, so that when you do get funded, you're going to continue to progress in the right direction. So there are mental and emotional situations that happen as you approach the green line, that $53,000 line. So I wanted to bring that up because it comes up a lot, and I do advise traders on what to do there. It's kind of in our system, and I want to kind of give you some tips on that right now. So let's get to the mechanical adjustments that we're talking about here that you can make in order to be a successful prop trader. The first psychological dilemma is, when the market starts my way, shall I take the low-hanging fruit, or should I let a good thing run? I mean, a lot of traders, really lament when they take a short profit and the market continues without them. Why didn't I stay in? On the other hand, when the market goes up but then retracts and you break even, you say, why didn't I take what God gave me when I could? Well, the answer, I believe, is fairly simple, and that is the mechanical solution is to build the distance from the red line via a scalp runner combination. In other words, the fact that the red line is there, that you don't want to hit that red line, that's where, and the closer you get to it, the more emotions will enter into your trading if you're not a totally disciplined trader. And everybody has that little gap, I guess. So it could be a big gap or a small gap, but trading nerves, they generally can't be eliminated completely, but they can be managed. The fact that you have a trading plan that manages them, you can only, and that's really what I want to stress here, that we're managing the mental and emotional stress that occurs in these situations. But you want to stay away from that red line. And if you can have a trading approach that keeps you away from that red line, it makes a lot of sense. If you were to take on two positions, or if you were to take on 4 positions but treat it as 2 and 2, but taking on at least 2 contracts, say in a futures position, and treat one as a scalp and let the other one run with a trailing stop, with a trailing with a process that to maintain the majority of what you've gained without giving it back. So have a scalp and what I call a runner. Then you've solved the dilemma of which should I do? Shall I take the low-hanging fruit, or should I let it run? Well, you're going to do both. Now, what you need here to do both is a trigger that you can count on, that gives you some energy right from the beginning. Within the first couple of candles, I always wait till the close of a candle in my triggers. I'll show you one of them in a second. And that trigger 2/3 of the time will lead to a jump in the price in case of a long trade. And that would be the time to take a profit on half of your positions on one of those two positions, move your stop to break even on the remaining position, and then move higher. And as market move higher, defend that second position. That's really the way that I have discovered to keep padding that scalp. You're putting money in your pocket, you're putting money in the account to move you away from the red line. Okay, and so as you do that, if you can do that 2/3 of the time with every trade, knowing that 2/3 of the time you're going to take some degree of scalp, that's going to keep that pad, that red line away from you by continuing to pad it, no matter what the second position does. Okay, let me give you a particular example. This right here is one of our loaded gun triggers. This is the 8-bar exponential moving average here, which I consider a golden mean. Don't worry about the red. That's something that we use to so that we don't get into trades, fake false trades, and so on. It's a guardrail type of thing. But I wanted to stress to you the value of a trigger and the value of considering your market. You're buying two positions at one time, treating one as a scalp and one as a run. In this particular case, you would be buying two positions at this particular level. Okay, at the close of this candle, at the open of the next candle, I usually just go to the market. Now, and what I do is this is a hesitation candle, which is important in the trigger, followed by a strong candle moving through the 8-bar exponential moving average. This is one of our triggers. And I put the stop below the low of one of whichever is the lower of the two candles in the trigger, which would be right here. And I usually, when I instruct traders to do is look at the length of the body and project that body higher in the case of a long trade, so that when I look to take a profit, I'm looking to take 80 or 90 or 100% of the length of this body. So I will measure the body and put my limit sell in at 80 or 90% of the length of that body in the right direction. And in that particular case, I would have taken my scalp here at this point. And at that point, I would have one position left, and I would move my stop to break even. Now, the market continued. Now, the market did not continue higher. And with this candle, you would have been stopped out of your second position. But what did you do? You put money in your accounts. Instead of, say, 50,000, you had 50,200, whatever that would wind up being. This looks like the S&P here. And you would have given away open trade equity from here to here. You actually would have given away more than you've gotten, but it's a very small amount rather than anything else. So the idea here is that I just want to show you an example where something doesn't work out in the long term, but you've benefited, you've increased the value of your account without really hurting very much your distance to the red line. It would have been just maybe $100, as opposed to much more than that if you were not to have taken the scalp. So I think I just want to demonstrate to you the importance of continuing, even in a market, even in a trade that didn't work out from the standpoint of running like this here. The fact is that if you take your scalp properly, after a responsible trigger, then you can pad yourself for that red line. So note that taking multiple contracts in the entrance and scaling out at the support resistance area, I think that's also very important. If I had 3 contracts here, I would have taken out one at my normal scalp, which I've described to you, and I would have taken out another one it's going to be a resistance level, a previous high. I would have taken out my second one here if the market had continued higher. So I just kind of want to mention that there are other areas that you want to consider as a responsible trader to peel off so that you can continue to pad that red line as you ask for more from your remaining positions. Okay. I'm going to look at the chat real fast. I see somebody is, yeah, this is a I'm showing you a 5-minute bar chart, a candle chart, but I use this right now. I'm in a trade because I had this particular presentation to do. I looked at a 60-minute chart and I found a nice signal in a 60-minute chart that I'm going to run with for the rest of the day if I don't get stopped out. But right now, I've already taken my scalp in that earlier today, and now I have my runner with my break-even stop. So you can do this in any time frame. The triggers that I use, the positions that I have, can be used in any time frame. Okay. Here, for instance, is a reverse of that signal. Look at that. And if I had taken this body and extended it down, I would have had my scalp in here before the rest didn't work out. So, taking your scalps can be important. Listen, not everything is going to run for you. And of course, in this particular case, I'm looking at a support level here in a short trade. So I would be taking my profit before the support. I'm giving you some basics here, but I want you to understand that to solve the psychological dilemma of should I stay in and let this run, or should I be taking a short profit? Do both. Do both in the way maybe that I described, or the best that you can do. Okay. The second mechanical adjustment that you want to make is increased cortisol level as you near the red line. In other words, as you listen, the great thing about prop trading is that you can reset if it's not going well for you, or if you hit the red line. You can actually be more aggressive, and that's for another discussion during the phase. It doesn't really teach you how to be a better trader, but if you're a good trader going in, to be aggressive in this phase, for the small cost of resetting, may be a good idea for you, and that's a different discussion. There are two things that you can do if you don't have a good result early in the process of qualifying, and that $50,000 account gets to 49 or 48 to 48.5, and you're getting close to within $1,000 of that red line. One thing that you can do is you can decrease your position sizing and work your way back. Look, if you have a good trading plan, you should be doing more winning than losing, and therefore over time you should be doing well. So, but when you get close to that red line, it's a good idea to, of course, reduce your position size. Stay with your trading plan that you've tested and will work over time, and use and go with the micros or the minis, depending on which. The micro gold contract is only 10 ounces. You can work your way back very nicely using that. I often use micros when I have what I consider a weaker trigger. I won't go as strong, and if it's the end of the day and I have a nice profit, I don't want to give back a lot, I'll go to the micros. I have no problem with trading 3 S&P micros in a $150,000 account or a $50,000 account. So building back, there's a place for these micros and minis. Building back is a way to do it. And really, as far as giving you practice and experience in building back, it's going to help you when you get funded. Because when you get funded and you hit that red line, then you got to go back and retest. That you don't want to do. So if you don't, once you're funded and the market goes against you and your equity goes against you, it's good to have the experience of using micros and minis. So this probably is your best approach as you approach the red line. The other is to reset. Look, if you're down to the final $500 to the red line, you've got to work your way back, not only to break even back to $50,000, but you have to now you got to go that additional 3,000. Now you're asking yourself to go $5,000. Well, why not reset? Why not pay the $80 to reset your account? Or right now they're running a half special, so $40 to reset your account so that you can try again. And in these resets, they literally do them within 10 minutes. You're back to your $50,000 balance, and you try again to get to achieve 3,000 before you lose 2,500. So starting from scratch and paying the reset fee can make sense also. to certain traders. So it doesn't help you when it comes to the experience of building yourself back and having the confidence that you can when you get into those situations with a funded account. But to some who know that they're a good trader and have experienced that for themselves and decided, hey, why should I even risk my own money when I can risk somebody else's? Reset may be maybe a good alternative for you. Okay, do the math. If the reset fee is low, I think you can be aggressive. I mean, if the reset fee right now is $40, and if you think about when you traded your own $50,000 account, or maybe even a $5,000 or $10,000 account, an $80 loss, or to pay $40 a month and then reset it for $80, you're into it for $120. That's nowhere close to what you've been losing. Literally, you could be qualifying and learning how to manage and succeed in prop trading with a lot less loss along the way and a lot more success along the way. And what that does for you is help you to achieve what I call a positive expectation, because every good trader does expect to win in the long term. Maybe not every day, but I expect to win every day. And if I don't, I excuse myself and understand that it's part of the long-term process. But when you're in a situation where you're close to the red line, to spend another $40 right now and reset it and go again, because really to the professional trader, time becomes a real factor. Who wants to spend the time to build back when you can just build back automatically? Well, that time is well spent if you need to have the experience of building yourself back so that you know you can do it when you're funded. I think I'm making myself clear there. So the experience of building your way back will help you when you get funded. So you have these two choices, and I always suggest that when you're testing, that you test for at least that you try to test for at least 2 of these accounts. You can have as many as 20 accounts with the firm that I have decided to recommend to you in Apex. You can have as many. I have 10 accounts right now. I have 7 $50,000 accounts and 3 $150,000 accounts. I'm trading $800,000 of their money, and the more accounts that you have, it sounds like it could be confusing, but they have something called Trade Copier, where you can put it into one account. It can go to as many accounts as you want at different exposures. But suffice it to say that when you have if you have multiple accounts, and in my case, in the case of my recommendation to you, start with at least 2 $50,000 accounts. This way, you can trade one a little bit more aggressively maybe than the other. And this way, you don't have all your eggs in one basket, and you can, again, maintain that discipline to do the right thing at the right time. Okay, rather than in the same way that you don't want to put all your eggs in one basket. Diversification. We all know the value of diversifying. So I do recommend that you take on at least 2 positions when you start. Kind of another suggestion. So we've got the 2 mechanical, starting with 2 positions and treating one as a scalp, one as a runner. And then, of course, what I've just described to you here, when you get close to that red line, and it will happen, it happens, that red line is pretty close. It's only $2,500 away. Go ahead and use the micros, or go ahead and reset it if you want to be more aggressive. But either one has its advantages. Okay, so let's get to mechanical adjustment 3. Are you digging this? Are you enjoying this? Yes, I've gotten payouts. I'll show you what that looks like. I just want to make sure that you're with me here. There are over 100 people on this. I just want to make sure that you've gotten you're with me on this. Are you enjoying this? Are you ready for mechanical adjustment number 3? Okay, it's great info. Thank you. I appreciate that. All right, let's get going. Thank you. Okay, here is mechanical adjustment number 3, and I know that those that have been prop trading are really zooming in on what I'm saying, because it really hits the heart of the challenges in prop trading. You know, it seems almost unbelievable that you can trade somebody else's money and still get 90% of the profit. I mean, it's crazy. It seems crazy, and things. There's got to be a catch, and you know there is a catch. The fees. Don't worry about it. They know that 90% of traders who are not winning on their own are not going to win here either, and therefore they're just going to continue to collect fees. But people like me and maybe like you who can trade responsibly or building toward that, we get to brag. We get to show what my payouts are and so on. We get to show everybody how well we're doing so that we can attract the next 10 people so that 9 of them can just pay fees to them. So they love the brag. They love to pay us 90. In fact, they pay us 100% of the first 25,000 that I made. So they want us to win. They want us to brag. They want us to bring in those that are, they're not looking for the 10%. That's not where they make their money. They're making their money on the fees, on the reset fees, on the monthly fees. So don't worry too much about them. Honor them from the standpoint that they're giving us the opportunity to do this, to actually risk somebody else's money and make 90%, the first 100% of the first 25,000. A lot of firms tend to do that also. Make it very, very attractive for the winners. All right. Let's take a look at psychological dilemma number 3. I'm close to passing, but I don't want to lose ground. When you get close to that, green line, okay, by trading at least 2 qualifying accounts, and again, I'm making this an official recommendation. I kind of mentioned it just a few minutes ago, but you want to trade at least 2 qualifying accounts, okay? Initially trade them with your usual trading techniques. You want to do that initially. You want to, of course, follow your trading plan. That's all you have, okay? When you get close to qualifying, when you get close to that green line, that's when stress comes in for traders. It may not seem, and this is very, very common. This is the second most, seems to be the stressful situation, where you get very close and then you never get there because you become too careful or too aggressive or whatever. So when you get close to qualifying, you want to trade those 2 accounts a little bit differently. This is what I suggest to you. Trade one very conservatively, and trade one either more regularly or a little bit more aggressively. I say regularly and conservatively is a really good way to do it when you start it. So you want to take the same contract, okay, say the Japanese yen or the euro dollar, or even a couple of micro S&Ps or whatever. When you get close, you want to have different exposure. So in a micro, maybe you take on 2 micros in one of the accounts and 4 or 5 micros in the other account. So you want to honor your trading plan by choosing the direction that it dictates to you, but you want to vary your exposure, because if you're right, then the one that you've traded more strongly is going to cross the finish line, and the other one's going to get closer. If you're wrong, then the one that you traded aggressively is going to fall back somewhat, but the one that you traded conservatively is not going to be affected all that much. So you want to try to manage that situation. Listen, you have nothing but your trading plan. You want to continue to use your trading plan the way it is written, the rules, but you want to adjust the process a bit, your exposure in the way that I'm talking about. So, or you can use different contracts and the usual technique. In other words, if there is a day where the dollar is getting challenged, is being pushed weaker, then you can take a look at the Japanese yen and the euro dollar. Both are currencies that, of course, are measured against the U.S. dollar, and in a falling dollar, both should have some strength. So if you get signals in both, take one with the Japanese yen and take the other position with the euro dollar, knowing that the euro dollar has a higher basis. It's $1.07, where the Japanese yen is 68 cents, 67 cents compared to the dollar. So with the same percentage move, you're getting a greater move from the euro dollar. So it's a way of, again, adjusting your exposure by adjusting the power of each of the contracts. So I think I'm kind of, I don't want to beat a dead horse here, but should you go small? Should you go small? Well, I don't think you should go too small when you get close to the finish line. Do what you've been doing, regular position in one and get a little bit more aggressive with the other. That's what I like to do. Stick with what got you there. So this is the dilemma that this is the way to get through that dilemma. You do this a couple of times, you'll get through that green line if you have a good trigger and a trading plan that's tested over time. Okay, so those are that's what I wanted to give you today. Those three mechanical adjustments, things that you can adjust. I call them nuances in your trading plan in order to customize it toward accommodating the rules that other traders complain about, but we as traders that realize this golden opportunity of trading somebody else's money and getting 90%, let's work with the rules instead of spinning on them and complaining about them. Let's find a way to work around them. What program is called workarounds. And so what I've done is I've taken our loaded gun trading plan and I've instituted a number of these workarounds, another number of these nuances in order to fit the our best trading plan in years ever. Probably, I told you, you saw the books that I've written. This is one of the loaded gun trading plan I've now traded for almost 3 years. It's got to be the best one that I've ever written. It's so simple, and it's so workable, so usable with prop trading. So let me give you a little bit more on prop trading firms. They're going to fund you with 50, 100, even $500,000, and you're going to earn 90% of the profit. This is what they give you with Apex when you get funded, and these are the ones that they've sent me. I've also passed one with Top Step, another firm that is good to do business with. I also recommend them. I wound up going fully now with Apex. This is what it looks like. Somebody asked me if I've gotten money from them. This is what it looks like. This is the first one that and this is back in May of last year, was the first time I requested money from them, and it goes into your account. The reason I like you to start, even though I believe that the $150,000 increment has the best numbers, that number is not 2,500 to the red line. I'm going to show it to you in a second. It's 5,000. So that room gives you can trade the same and you have a lot more room. I like that, but I like the 50 best to start off with because it's the quickest way to see money into your checking account. When I got that $1,000 in my checking account, they pay you twice a month on the profits that you request. And when I first got it, I called the bank and I said, "Is this real? Can I spend?" I was still doubting it. Yes, it's your money, you're spending it. And of course, since then, I've realized that it's all good. So, but they congratulate you. They want to keep you in the flow, and that's smart. But now, since then, I've last week I qualified for 2 more $50,000 accounts. I'm sorry, I put the 150s here, but the 2 more 50,000. So now I have 7 50s and 3 150s. And so what I'm doing is helping traders to manage several accounts. Listen, I'm learning a little bit about about what to do with how to maximize the prop trading world. I believe that it's going to be the death of simulated trading. I mean, why trade in simulation and believe that you're ready when you could be trading in simulation, paying some fees as you practice and as you get better at it? But in the end, instead of saying, "Okay, I'm ready to trade real money," you say, "Okay, I'm ready to trade their money." You get funded. So I believe that many more and more traders. It is a passion right now for a lot of traders, and rightfully so. I did a prop trading firm study. I hired somebody to take a look at prop traders, the different firms doing it. I wanted to go with my main criteria is who's been around the longest and who's paid out the most. If you just write me at admin@thedisciplinedtrader.com, admin@thedisciplinedtrader.com, and just request this study. I'll send it to you so that you can look for yourself and kind of understand why I chose Apex and Top Step as an alternative. But there are there's probably 100 prop firms out there. So if you're interested in this study, just let me know and I'll send you a readable version. Okay. The winner was Apex. They've paid out $100 million. They've paid out over $100 million. they've got a high rating on Trustpilot, although I'm not a huge fan of Trustpilot. It's nice to have and they have traders from 150 different countries. This is a zoom in of the Apex version of that study. And if you can see, I just want to show you the $50,000 area. Normally they charge $167. And when they're super sale, 90%, and once in a while they'll have that, it's only $16 a month. Well, right now it's an 80% off, so it's $33.40 a month right now. And here's the targets: it's 3,000, as I mentioned, the drawdown being 2,500. Don't worry about any of this. If you look at the 150, you notice that the target is 9,000, but even though it's quite a distance between the two, a lot less distance than here, this $5,000 cushion makes a lot of difference. You can see even in the 250 and 300, they don't give you a whole lot more cushion than they do in the 150. But I want you to start with the 50, 250s. That's the way I want you to start. And I want you to take advantage of the one-on-one coaching that I'm going to offer you. We can get together as many times as you want for 90 days. But I want to show you this comparison. And I want to, and you again, admin at thedisciplinedtrader.com, I'll send you the full comparison, okay? But if you want their best pricing, you see right now, the special they're running is 80% off. Sometimes with people that they know suggest to them, like I do with these kinds of presentations, they give me a special link that can even be a deeper discount than one that's advertised. I've set up this link right here, thedisciplinedtrader.com/Apex. If you use that, you'll always get to their best deal, okay? And no matter what it is. Now, you won't see it until the final page, the final where they say, okay, click the button and you're committing. That's where you'll see the final full discount. So I wanted to give you this just in case we don't see each other anymore. At least you'll have the best deal from Apex, which is one of the most popular, if not the most popular prop trading firm, okay? So hopefully you wrote that down. Let's get to my offer to you, the Disciplined Trader, the Loaded Gun Simple Trading Plan. You get the core Loaded Gun Trading Plan. You've got, which really encompasses less than 2 hours of videos, and the whole trading plan, all the rules fit on one sheet of paper. All the nuances, I mentioned the little things that you can do that don't appreciably increase your the risk, but will help to fit you as a trader as opposed to challenge you as a trader. There's currently 7 of them. We're testing two more right now, nuances. I don't give you the nuances unless I've tested them fully, that they'll really help you out. The monthly get-togethers, we have those the last Wednesday of every month. We've got probably 20 or 25, I think it's 24 get-togethers that are already recorded. So we've been doing it for 2 years. And in those get-togethers, we all have our little Zoom boxes, not like this with a webinar, but we all have our Zoom boxes. We share experiences. And if you don't and ask questions for the new people, if you can't make it online, of course, there's the recording. So once you join, you'll have access to the recordings, okay? And I just want to give you a bonus that is really like no other. I want to be there with you. I want to hold your hand and make sure that you understand the process of prop trading and the process of Loaded Gun and how we've designed Loaded Gun to get you funded and beyond, okay? I want to offer you unlimited one-on-one coaching for 90 days. As soon as you invest in the Loaded Gun Simple Trading Plan, you're going to get an email with a calendar link where you'll be able to schedule a personalized one-on-one walkthrough with me. And I'll proceed to learn about your trading background, advise you on how to get a quick start with your new purchase. And as you perfect the running of the plan, which won't take long, I'm going to be there if you need me for as many one-on-one coaching sessions as you need to pass your evaluation and beyond, okay? I'm going to be there every step of the way. And I want to make sure that you know that 90-day clock, I don't really count days to the 90th day. But I want you to know that if you've got things set up, you're busy in the next couple of weeks, but you want to take advantage of the special pricing that I'm going to give you today, go ahead and do it and learn about look at the videos, look at the past get-togethers, understand get a basic understanding of the simple trading plan. And then when we have our first meeting, when you book your first meeting with you, that's when your 90-day clock will start. So don't worry about the 90 days. And I'm doing a lot this month and I'm not going to get started till March or April. Do it now, learn the system, Start your 90-day clock whenever you want, okay? The truth is that the majority of individuals have 1 or 2 meetings with me. That's all they really need. Others who are more specific, or I have somebody I call the question man. And he's got a lot of questions, and that's better than having no questions, in my opinion. Seems to be he's meeting with me every other week, and I'm good with that. You know, as he moves along, and he's just passed recently his first qualification on his first 250s. Now we're talking about the difference between how you act as a qualifier and how you act now that you're funded. So I want to be with you this entire way. Nobody is doing this, okay? There is a magic to one-on-one coaching. I won't go through either one as our time is a bit limited here, but suffice it to say there's flexibility. You can schedule your time with me whenever you want, but the most important thing is this last item, accountability. When you're accountable to somebody, you get things done. That's just the way it is. It's the way it is with me. It's the way it is with you. And when you learn a particular, even the simple trading plan, you start to approach it, if we can get together and on the first meeting, I get together, learn about you, and I want your understanding of it, and then I will correct it, and we'll go on from there. But I want you to tell me however. I'll tell you, I'll advise to you that email me on a weekly basis and let me know how you're doing. It may not involve a one-on-one meeting, but I want you to be accountable to moving forward. Accountability is big, and I'm going to be there for you. It's very, very important. Here is just last week. I said this week, but this is last week. Mike wrote me. He says, I passed an Apex $100,000 valuation in 4 days. Doesn't take long when you get it right. Traded a loaded gun, mostly scalping, but a few runners brought it home. And that's what you're going to experience. It's going to take a lot of scalps. I was never a scalper before this. I'm never a scalper. I mean, I understood the idea. I understand why some people like to scalp. They don't like to lose money. That, you know, that's a big thing. And I'm good with that. It's a way of winning. But for me, I would rather defend and look for the big trade. It was just the way I operate. Okay. But in this particular case, I have learned to do both, and you should too. He passed Apex $100,000 valuation, 4 days with loaded gun, mostly scalping, but a few runners brought it home. I still have a few trading days left to finish, but I made $6,000 in 4 days this week. Great trading plan. Thanks so much. So this is just one of the many examples. And this is from Sandra, who said, who wrote Tisha and I, my wife is the brains behind the mental part of what we do. I'm making some progress now. I really credit your guidance and your voices in my head. I now have 3 funded accounts with Apex and requested my first small payout from 2 of the accounts. What ends up to be, Sandra requested 2 $500 payouts from 2 of her accounts. Were enough to get a payout, so she requested 2 $500. It's the minimum that you can request, $500. So, and she's gone beyond that now. I won't go through it, but here was her initial response, and she is moving ahead rapidly. Here's Craig, who said, please share with your wife, Tisha, that since funding my first 5 Apex $50,000 accounts last Thursday and 5 more 2 days later, this Tuesday, on those 10 funded accounts, he profited $21,000 in real money, all on the NASDAQ. So there are ways to, he's trading 10 accounts, okay? So I want to get it, why would somebody do that? There are reasons for that. I can explain that to you at a later date, but the idea is that he's up $21,000 in a very short period of time and working on 5 more to get funded so that he'd have 15. God has so richly blessed me. Ken is moving in exactly the direction that I like to see him move in, and that I'm sure he'll continue to move in. He was struggling before with his own money, and now that he's trading somebody else's money, he is a responsible guy by definition. It's just that the nerves got him. This was enough lowering the bar on the emotions by trading somebody else's money to do very, very well. He's taken my advice on how to propagate more accounts and be able to achieve a profitability in a very short time of $21,000. Okay, I want to show you this one real quick. This is just very quickly. This is just somebody who requested on the middle of December. By the next Thursday, 5 days, this was a Sunday, by 5 days later, he's already trading, okay, and making and making profit. Okay, it doesn't take long. I want to give you a second bonus, and I'm going to set it all up for you. I call it the done for you setup of the data feed and the trading platform. Apex and Top Step have a more advanced setup and can be confusing to some tech challenged traders like me. It took me 10 days to set the NinjaTrader and the I use Rhythmic, but you can use TradeOutLoud, your data feed. So I'm going to connect you with my young genius. His name is Brady, who'll jump into your computer, and you can just watch his mouse move around, and he'll set up everything for you. So all you have to do is start trading. It takes him like 20 minutes. And he'd set it up all for you. I'm going to throw that in for you. It's a $150 service that we have that actually Roger took advantage of at one time. He said, all in all, it really went well. Brady is obviously skilled. His cursor darted back and forth without explanation, and he ended up feeling like he had gotten a bargain. That was from Roger. So I want to set it up for you. So I want to give you the loaded gun simple trading plan, all the nuances, the monthly get-togethers. I want to give you an unlimited one-on-one coaching for 90 days, and I want to set everything up for you, and I want to give you a guarantee. I am so confident that you're following the loaded gun simple trading plan will result in you getting funded by your prop firm so that you can risk their money and not yours and still receive 90% of the profit you generate. Just share your trading experience with me, that you followed the simple rules, it didn't work for you, and I will refund your purchase price plus $500 for your trouble. That's a guarantee. It's an ironclad guarantee, and I'm handing it to you. So the risk is mine. I want you to get going on this. You get the loaded gun simple trading plan, the one-on-one coaching. Start it when you want for 90 days. We can meet as many times as you want. I want to set it all up for you. Brady will take care of it. He'll jump in your computer and do it. I want to give you, and right now it's on our site. If you go to our site, it's $24.97, which is a terrific value for the potential here. I want to give you 50% off today for $1,247. The price of all of this is, as we succeed, I raise the price. It's just the more and more people get. I don't have unlimited time, and to offer you unlimited coaching takes some time, and I want to do that. I'm willing to do that, and I want to do that, but it limits me on what I can offer. If you go to theirmoneyyourprofit.com and use the coupon code Riley, who just crossed over the Rainbow Bridge. Every time you type that, I want you to think positive things. If there's any questions, I'm going to be at the chat after this. So there's a chat feature on the page. I can answer any questions. I want to do this together with you. There is a limit of only 4 traders. It was 2, but 2 just kind of graduated a couple of on Saturday and Sunday. They're off to the races. I don't have to meet with them. They're out of the 90-day window. I want to now put you in there. So we have 4 traders, the first 4 traders. If you are not one of the first 4 traders, it'll ask you to be on the waiting list. Please do that if you're not one of the first 4 traders. But let me help you to get through this. It is real. It is happening. I'm actually writing a book on it. I think this is the future of speculative trading, especially